Welcome. This is Jeffrey Camus with another edition of Stock Smart, the February 1st, 2021 edition. Yep, a new month, but the same old shenanigans from the Red Edit crew and Wall Street Bets. Now starting a position against silver. And this is way more complicated than just, going after shorts. It's actually, they have to go. Essentially the Red Edit crew, there's been some rumors or posts about going after and trying to bump up and going after trying to short or create a short in silver. And the way that they're doing it is by purchasing the SLV ETF. And the SLV ETF underlying has a trust. And the trust says that with regard to the investments inside the trust, inside the ETF, they have to have that much silver on hand. So the way that a short works, and this is why it makes it so much more complicated, is the way that you would short or at least create a jump or a boom in the price is by buying up silver at all the exchanges that you can. And so overnight, over the weekend, we've had shortages in the exchanges because they're buying silver coins. People are buying any silver bars, whatever they can get their hands on in terms of silver is being bought. So in essence, they're going to try to create a position against the ETF, SLV, by saying, hey, we're going to buy so much of the SLV ETF, you need to back it with all this silver. And if we buy all the silver that's available, then that's going to drive the price up like crazy. Well, it has gone up in between. It was up at a high about 10-11% today. Highest silver's been in 8 years. So it is happening. And it'll be interesting to see if they can actually, accumulate enough. I mean, you'll see people, and silver's everywhere, right? I mean, it's your grandmother has it in her silverware, her silverware she got from her wedding, or was passed down as an heirloom from the family. So silver is everywhere. So the idea of really creating a short in silver is kind of unreal, but there is an attempt going on today to do that, and so it remains to be seen what's going to happen. But SLV is definitely in play, up as much as over 10% in the morning. So let's get to a stock I'm watching.
Stock watch.
A stock that's kind of interesting is SE, which is C Limited. So capital S, capital E, C Limited, trading at about 232.75 a share right now. Definitely in a range where if you're looking at just the technical measure of the chart, it's a beautiful technical chart. I mean, it's really just an upward arc. It has no negative downside since March really of 20. It's just straight up like a slope of a mountain, and moving really through its resistance at 233, 234. If it gets there, we're going to have more of a breakout. Now, this company is pretty interesting. It's not Chinese. It's you're going to have to, when you buy it, you're going to buy an ADR, which is an American Depository Receipt, which is essentially an ADR is when there's a company that's overseas, like Alibaba, Tencent. They will work with a bank locally, a United States bank, to produce the certificate, the ADR, and the bank actually owns the shares through the company that's overseas. You own essentially what's called an American Depository Receipt, and so, but it's not Chinese. It's a Malaysian company, and so it's not going to be hurt by if some of these Chinese companies get hurt. Because we've had some of this talk over the last year, it's not going to be subject to any of that. So delisting, not that really any delisting went on with either, Alibaba or Tencent. I mean, they talked about it, but it didn't happen. It's got great revenue growth. 163% last year. It's a digital entertainment company. They have a division called Garena, which essentially is a platform of digital content from games and digital entertainment, and the revenue grew something like 81% last year. And they have a battle royale game called Free Fire, and it was launched in 2017. It's one of the highest grossing games in Southeast Asia and Latin America, and so that's been really a big source of growth for the company. They also have another platform, a payments platform called C Money, and that raised about $18 million with their mobile wallet that they have in the third quarter. So they have 15 million users now in using that. Profitability is going up. They have a company called Shopee, which is losing money, sort of like Amazon loses money, but their AWS division makes tons of money for them. So it's kind of offsetting the losses there. And it's still, kind of reasonably valued. So it's a good stock to take a look at. I know we've added it. We've watched it today. It made a big move. It jumped up about 7%. And overall, up $16 today, 7.5% pretty much. And if it breaks through at 233, 234, probably going to go and reach another all-time high. So definitely one that you want to keep an eye on. So I did have a question. Question is from Heidi, and Heidi wanted to know, should she sell her Novavax?
The average investor.
Now, Novavax, as you know, is taking part in the vaccine process, and the stock has been on a tear lately. It's up from in early January. It's up from 127, pretty much just doubled in the last week. So when you look at a stock like this, it's at 264 right now, up from 127 only a week ago. So to me, I'd be finding I'd definitely be cutting the position. If I own this stock, there's no support below. Yes, it's growing. Today it went up again about 20%, but there's no support for it. If it falls, it could fall all the way to 175. You're going to lose a lot of your money. If you've made money in this, if you sat in this in January and you got in January, you doubled your money, take half off. If you like the stock, you think there's still gains, take half, put it in the bank, and take your gains. So the worst thing is to be greedy here and be a pig. You don't want to lose everything that you work so hard to gain because you're greedy. And if the stock goes up, it's okay. And Buffett always says there's always opportunities. There's always opportunities. There were opportunities last week, AMC, GameStop, you name it, Bed Bath & Beyond, Fizz. There are lots of opportunities, but taking a loss like that, you'll remember. And if anybody whoever gambles, if they gamble in Vegas, you'll always remember your losses more than you'll remember the wins. Whatever that is about, I don't know what it is, something in our psychology, but you'll regret it if you don't take some money off the table. So the being a pig, that pigs get slaughtered, hogs get fat. It's true, and we've all had to learn it the hard way. So if it were me and I'm sitting there and I double my money, take half off the table and let it run for free, and see what it does. And then if the start, and as a technical analyst, what I would look at is when it starts making that downhill pattern, have some kind of a stop loss in there. Get rid of it. Cover it with the stop loss and get out of it if it stops dropping. Or we read the chart and maybe have set kind of an alarm for yourself. If you're using a dashboard, set an alarm for yourself. If it hits 250 and it starts making 2 or 3 days of a negative pattern, then you'll know it's time to get out. So that's what I would do. Thanks for the question, Heidi. And we are growing. I'm not going to have as much time. I'm super excited because we've only had about a week of episodes, and I had 25, 30 questions in my inbox today. I'm going to try to go through some of those and maybe answer 2 or 3 in the next session. But today, that's it for Stock Smart. This is Jeffrey Camus signing off. You have a great day. Thank you.